What's up, guys? It's Jay here to show you basically how we took a day trade that went 400 to 600%. And I'm going to show you how we did it. So first off, before I take any trade, I always like to look at the bigger time frames. This is a must for me, right? According to my trading plan, it don't matter if it's a scalp, day trade, whatever I want to do, I always have to look at the bigger time frames. The reason why I look at the bigger time frames is simply because it gives me that extra confidence and confirmation if the bigger time frames are showing the same thing on the lower time frames, right? So what I mean by that is if AMD is bearish on the daily time frame, if I want to take some puts on a lower time frame, like 5-minute or 10-minute, 15-minute, knowing that that bigger time frame is bearish just gives me a lot more confidence and make it a lot less stress by taking that trade. So that's my whole goal about trading, is to keep it stress-free as possible. I know it's one of the stressful things, but there are ways that we can trade to make it, less stressful. So this is one of the ways that I do it. So number one, I always want to look for, if I'm taking puts, I definitely want to look for any type of rejection points and go from there. So number one, I want to find a trend line. That was for this particular trade. Trend lines were pretty much the way to go, right? So I went and I was looking at rejection points. And as you can see, we had this nice trend line, right? We rejected this trend line a couple of times. We rejected it here, 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 and here, right? We rejected that. So now that we know that we are rejecting a trend line, next I'm looking for more confirmation or confluences to support my reason for being bearish, right? That ain't like, yeah, we got a trend line rejection, but obviously, the more confirmation, the better it is, right? So normally, based off of just, history and just being in trading from experience, normally when you have a trend line rejection, you normally have some type of chart pattern. You either have a rising wedge or you have something like a bear flag. So in this case, we actually had a bear flag, right? So you can see right here, we had that impulsive move down, and then we had our correction to the upside, which created a bear flag right at the trend line rejection, right? That's perfect. Now, I also don't have, on TradingView, I don't use colors like red, green, or red for my TradingView. The reason why is because if I'm in a trade, if I'm in calls and you see a red candle, you get a little shaky or just like a little emotions come with it. We are emotion human beings. So, that just comes with the game. So one way that I did that was I just took the color off of it. But as you can see, the darker candles are just red candles. So right here, we had a bearish engulfing, right? So that's another confirmation. So we have the trend line rejection, we have a bearish engulfing, and then we have a bear flag, right? So at this point, we want to take it down. I won't really be looking at calls here. So now we go to the lower time frames to see if we can find different time frames that support this reason, because you want to have multiple time frames agreeing with the same thing. So come down to the daily time frame. What do we have? We kind of want to see pretty much the same thing. We see rejection here. Oh, guys. Right? Okay. Okay, so we have rejection, 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 and rejection, and we still have that bear flag, right? And then when you zoom in, now that we have our EMAs, right? My 9 EMA is the blue one, and then we can zoom in a little bit. My 9 EMA is the blue one, and then my 21 EMA is the orange one. And as you can see, we're starting to cross down, showing bearish, right? So now that I look at the lower time frame and I have another time frame that agrees with the weekly time frame, now I'm more likely to be more confident in taking puts. So now it's time to actually go get my levels to take a day trade, because I did not swing this. This was a day trade. So for the next day, I wanted to get a day trader opportunity within this bear flag, right? So here we go. We come down to the smaller time frames. You can come down to the 4-hour. I normally just come down to the 1 hour instead of the 4-hour and just go from there. So when we come down to the 1 hour, now I'm trying to get my levels to actually take entry, right? One of the things that I do is a lot of this time, especially in the current market that we're in, is if I will normally take the closing price as a level. I will make that a level. So AMD this day had closed at 99.75, right? So I knew that I wanted to take puts around that level, right? That level is a level of significance, right? So I wanted to take puts below 99.75, the closing price. So here we go. We already have it plotted right there, 99.75. But also, as you can see, that level was support at one point. That level was resistance at one point, support, and it was a support, nice support right here. So you can see like these prices aren't there for, they're just not random, right? These are real prices. So I wanted to take puts below the closing price. And normally in a call setup, I want to take calls above the opening price. So let's see how this played out. Now it's time to get my levels to the downside. If I don't already have my levels, I just make it again. One thing that I do like is wick fills. As you can see right here, we have right there a wick fill, right? What a wick fill is basically when price, came all the way down here or went above. Wick fills can be to the upside or downside, and pretty much we want to fill this wick, right? This is all price action that just happened really quickly, and then they pull right back up. So now I know that is a potential area that we're going to test if we break below, if we come down below that closing price, right? That is a level, right? That is a level. So I'm going to go ahead and plot that, right? So that level was at basically 96. So I'm going to plot that level for a wick fill if we hold below 99.75, and then I'm going to use that. So now I have my game plan. You can go make more levels if you want to, but that's my main level to take this trade. And understand it is 0 days to expiration on the next day, and that's pretty much how the gains were so much. But understand you can utilize same day expiration if you have the risk tolerance for it. It's obviously a riskier trade. You didn't have to go with the same day expiration. You could have went with a, couple weeks out or whatever, however you want to do it. But this is just how I did it, right? So we plotted that level for that wick fill at 96. And then if you want to, I normally make two to three levels just because, normally it always clears that first level. So we have another level here at 94.60, 94.60. So you see right here with support right here, resistance, support right here, support, support, support. So normally I'm gonna just leave it like that. So now that we have our levels and everything, now we're waiting for the next day for the market to open and kind of see how it plays out, right? But understand that we're paying attention to that closing price because in that opening price, because if it breaks below that closing price, we're going to take puts. And if it breaks above the opening price, we're going to take calls, right? Keep it that simple. So as the day went by, now that the market, you're ready to take a trade. This is the day right here. This is our area right here. The market has not started yet. Normally what I do is I normally have multiple time frames up. So I normally have the 10-minute. I normally execute off the 10-minute. So let's do the 10-minute. This is the 10-minute time frame that I'm on right now. And then here, so we have the 10-minute right here. So we have our 10-minute time frame. And then I normally have like a bigger time frame just so I can, catch a bigger move. So we got a 10-minute time frame, and then we have like the hourly time frame, right? Okay, so now that we're about to start the market open, we're about to let it play, and then we're going to let it play out, right? So you can see the market is now open. There we go. We're retesting that level. All right, we was having some difficulties, but I'm gonna just plug it in. Okay, so the market is pretty much about to open. And remember, we're looking for below that 99.75 level. We want to see what it does around that level. And then if it breaks, obviously, we don't take the trade. But if we break below, or if we can just hold below, then we'll go ahead and take that trade. I normally don't trade the first couple minutes, at least the first 5 to 10 minutes of the market being open. Hence why I use the 10-minute time frame. So here we go. So the market opens right here. It's about to open. It's open now. There we go. So as you can see, we have a push to that level. Look exactly. This is the level that we're watching. So the market opened up on this candle. We had a rejection to that level, patches to the wicks. At this point, we know that sellers are there. So at this point, we're rejecting that level. You pretty much can take the trade from there. Not really much more confirmation you need. As you can see, we opened up below that level. We retested it, and we rejected it. You got a long wick like this, you can get ready to take the trade. And then right here, that next candle formed and it already was selling off from there. So then this is where we pretty much took entry at, around this right here. We took entry around this area, right? And pretty much with a stop loss right above, we can draw our short position right here. If we took entry there, right? Stop loss if we can break above. And then our target is that wick fill. So pretty much, just let the trade play out, like let it do what it got to do, right? So here we go. So boom, we took entry. Here we go, nice candle. Here we go, there it is. It hit our price target. We can start trimming it soon, selling to strength. A lot of people always wait for a pullback or another candle, and then they start seeing their P&L losing. No, it hit your target, you start trimming, right? So there we go. We start trimming. We can move this over just a little bit, kind of show you. So we went ahead and start trimming. If you want to hold, you can still hold. If this is the time that you're looking at the overall market and seeing if it's still coming down. This time the overall market still was coming down. Normally stuff like this, you get bear flags, or you get like a retest of the 9 EMA. So then we just, take our profits and just pretty much hold runners and see what we can get. So here we go. We hit that level, then broke below. As it keep going below, you can keep doing what you got to do. Here we go. Still below that 9 EMA. See right there how we tested it, still below it. So that's still thinking bearish. I'm still thinking bearish because we can't break above that 9 EMA, right? Here we go. We created a bear flag right at the 9 EMA. Here we go. Boom. Beautiful. Then we have our next target. So at this point, you can extend your risk to reward to the next target, which is down below. So look at all that risk that we're getting, guys. Look, this is crazy, right? Look at that. This is a 13, right? So here we go. See if we hit our next target. There we go, hit our next target. And at that point, I'm normally out or whatever, or, I still can hold some runners. But as soon as they hit, guys, you have to be like quick with it. As soon as you hit your target, guys, go ahead and start taking your money off the table. And at this point, normally what I like to do is I like to set stop losses, or you can have a mental stop loss if we break above that level. If we break above here, the level that it broke, for you to hold your runners, if we break above that one, you could just go ahead and cut them for profit, or you can start cutting them as it, like however you want to do it, right? There's no right or wrong way, right? So just keep letting it run, see how the finish plays out. Here we go, came back down below. And at this point, it's free game. Just keep chasing it with a stop loss, right? Just keep chasing it with a stop loss, right? So here we started building some nice, rejected to go lower. And then at that point, it's pretty much just chopping consolidation or whatever. But overall, this is pretty much this move from this top to down this bottom. This was a 400 to 600% move. If you held all the way down here, you call about 600%. And this is pretty much how we did it. This is a quick, easy trade. Like I said, we took puts at around that closing price, we use the closing price as a level. As you can see, it respected that level really well when we opened up, rejected it, and then we just took it lower, right? We did not get shaken out exactly on this bear flag simply because we took most of our position on this candle, so that's a strength. And then our runners, we ended up having a bear flag right below the 9 EMA, which kept me in the trade because it's like, okay, well, if we stay below the 9 EMA, I'm thinking bearish, bear flag right at it. This happens a lot. And here we go, hold it down to our next target, and boom, there we go. Nice little trade. We risk 1 to make 13. So there you go.